What do you think your gold is actually worth? I mean, what is it worth to the United States government right now today? If you just looked at the screen and said, around 26.50 an ounce, I'm sorry, but you're completely wrong. Dead wrong. Go look it up. Buried in U.S. Code, Title 31, the official, statutory, still in force price of gold is $42.22 per ounce. That isn't some dusty typo from the 1970s. That is the number written into federal law. It's the number used every single day on the Federal Reserve's own balance sheet. The Fed holds gold certificates for roughly 261 million ounces of real, physical gold. At that legal price, that entire hoard is carried on the books at just over $11 billion. That's pocket change for a government staring down $36 trillion in debt. But at today's market price of around $26.50, that exact same gold is actually worth nearly $700 billion. That's a $680 billion hidden asset the government is deliberately refusing to recognize, at least for now. Why would they just leave almost $750 billion sitting on the table? Because that massive gap between the official price and the market price is the most powerful financial weapon Washington still has, and the safety is already off. Here's the part almost nobody understands. The Secretary of the Treasury can revalue those gold certificates to any price they want, any morning they choose, without asking Congress for permission. It's explicit statutory authority that has never been repealed. With just one signature, the same 261 million ounces can go from $11 billion to $2 trillion, $5 trillion, even $10 trillion overnight. Think about that. Pure balance sheet money created with a stroke of a pen. No debt ceiling fight. No big quantitative easing announcement. No printing press whirring in the background to spook the bond market. This isn't a glitch in the system. It's a loaded gun pointed at the entire monetary system, and the government has been quietly cocking it for years. While the news channels are busy arguing about rate cuts behind closed doors, a group called the President's Working Group on Financial Markets, also known as the Plunge Protection Team, has been running exercises. They've been simulating systemic dollar confidence events and emergency monetary stabilization measures. Treasury minutes use phrases like national economic emergency and extraordinary accommodation tools. The translation is simple. They are wargaming the exact moment they pull the gold revaluation trigger. And when they do, they won't repeat the clumsy mistakes from 1933. When FDR sent government agents door to door to confiscate gold, that created martyrs and a resentment that lasted for generations. No, this time it will be elegant, bloodless, and almost entirely voluntary. Picture this sequence of events. Overnight, gold is revalued on the government's books to, let's say, $15,000, $25,000, maybe even $42,000 an ounce. The official reason? To restore sound money and back the dollar. Suddenly, that 1 ounce coin you bought at $1,800 looks like a 15 or 20 times winner. You feel like a genius. But then within days, Congress passes something called the American Wealth Fairness Act. It'll have overwhelming bipartisan support and a huge patriotic media blitz behind it. This act will introduce an 80 or 90% windfall profits tax on all gains from precious metals realized after the revaluation date. The justification will sound reasonable. They'll say, these gains were created solely by government policy, not by your hard work, therefore they belong to all Americans. You still technically own your gold. There are no jackboots at your door, no confiscation order. But if you try to sell it, you'll only keep pennies on the dollar after the new tax. What about moving it quietly? Every dealer, every refiner, every pawn shop, and every vault will now be required to file a real-time report to the IRS and FinCEN the second your metal changes hands. Banks will flag any large cash or wire deposits from precious metal sales as a risk. Private sales? Good luck finding a buyer who will take undocumented metal when the IRS is offering rewards for snitches. You're left with two choices. You either pay the tribute or your gold becomes expensive wallpaper. It's impossible to sell, impossible to use, and impossible to insure without triggering the system. That, my friends, is what 21st century confiscation looks like. It achieves the same result as 1933, but with zero bad press and 100% compliance. This isn't some wild theory, it's history repeating itself. The playbook from 1933 had 3 steps. First, ban private ownership and force people to turn in their gold at the old price of $20.67 an ounce. Second, 9 months later, revalue it to $35 an ounce, handing the government a 70% instant profit. Third, use that windfall to fund the Exchange Stabilization Fund, which is still active, still secretive, and still has zero oversight today. The only difference now is that the numbers are much, much bigger. We have a $36 trillion debt, $2 trillion annual deficits, and interest payments on the debt are about to surpass defense spending. The math is identical. Only the tools are digital. Let's do the reset math yourself. It's brutally simple. The M2 money supply is roughly $21.5 trillion. The U.S. officially holds 261 million ounces of gold. To back just 40% of the money supply with gold, which was the historical minimum for the Fed, the price of gold would need to be about $33,000 per ounce. What about 50% backing? That's a nice round psychological win. That would require a price of around $41,000 to $42,000 per ounce. And for a 100% gold-backed fortress dollar, we're talking about $82,000 per ounce. Do you notice anything about that $42,000 figure? It's almost exactly 1,000 times the current statutory price of $42.22. That's not a coincidence. That's the target written into the code, hiding in plain sight. And who already knows this target price? Countries like China, which has officially added over 2,200 tons since 2009, but the real number is probably double that. Russia has been one of the biggest buyers for a decade, and they kept buying even under heavy sanctions. Every BRIC central bank is stacking physical gold at $2,600 an ounce because they know the coming. Revaluation multiple is going to be 12 to 20 times. They are front-running the reset while Western investors are arguing about whether gold is in a bubble at its all-time highs. Here is the brutal bottom line. The United States government is preparing right now to revalue its gold by 50 to 100 times the current book price. When that happens, private gold holders will face the most sophisticated wealth extraction mechanism ever designed. You keep the title, they keep the gain. Your only window to act is the narrow gap between today's price. And the morning the president steps to the podium and announces a return to sound, gold-backed money. After that speech, every ounce you don. Tion yet will cost you 10 to 20 times more if you can even find any to buy once the rush begins and the windfall tax is already law. This isn't about trying to get rich. This is about making sure that when the greatest forced wealth transfer in history hits, the government isn't the only one who saw it coming. Get physical gold? Get it now. And get it outside the banking system if you possibly can. Because once the revaluation announcement drops, the rules of the game change forever, and the quiet plan becomes a deafening reality. The countdown is already running. Will you own gold before the price is $42,000 an ounce? Or will you be the one explaining to your family why you waited? You have to act today. There won't be another warning this clear. Thanks for watching, and don't forget to follow for more insights.